Welcome to the House Planet Mortgage Podcast. This series about holiday let mortgages is brought to you by House Planet and HCH Financial Services. On today's show, we're going back to basics. Our special guest is Ben Walker from House and Holiday Home Mortgages, and he'll be sharing 3 key tips that every holiday let investor needs to know. Ben, thank you for joining us on today's show. You've got 3 tips that every holiday let investor needs to hear. So take it away with tip number 1.
Hi, James. Yeah, thanks for having me. Really appreciate that. It's great to meet you. So absolutely, let's look at sort of holiday let properties, what they are, and what we need to kind of factor in before we even sort of make that jump. Kind of first point that I really wanted to kind of stress, and it's a step away from mortgages and mortgage advice, really, but understanding and getting real sort of clarity about your ownership structure, your ownership entity, and the FHL sort of guidelines, furnished holiday let guidelines, is key when sort of stepping into this industry. I always say to my clients when giving advice, go and speak to your financial advisor, go and speak to a suitably qualified accountant. It's really important that you kind of set yourself up from day one in the correct manner, because each person is individual, and what may have worked for somebody that you may know may be different for you. And obviously what we're thinking about here ultimately is the end game, which is revenue. If you're going to have a holiday let property, it's there to bring you an income spread, bring, earn you a profit. And with that, with any earned income, with any asset, with any sale of asset, purchase of asset, you're looking at tax responsibilities. And this is where getting that advice is key, just to get that grounded and know where you stand. From a mortgage lender's perspective, lenders allow for property ownership under personal name, so just like your residential kind of style of property, or you can go under the limited company option. And this is where you'll be a director of the company, but the actual entity, the property itself, is the owner. And you draw your income from that in a slightly different way.
Yeah, there are pros and cons of both approaches. It's going to depend entirely on your personal circumstances. So what you say there about talking to the experts, absolutely right. And in relation to tax, we, of course, work closely here at House Planet with Zeal Tax, and we'll put the links to their company in the show notes. So if you want any advice about FHL and the tax changes and capital allowances and whether you should be set up in a limited company, those are the guys to speak to. But I think, look, with any investment, Ben, it's just so important to do your research and understand exactly what you're letting yourself in for. And that definitely doesn't change with holiday lets.
Not at all. Yeah, absolutely. It's crucial. Knowing exactly where you stand. The abolition of the tax regime, which came in April this year, and there's been a lot of changes, recent changes for sort of furnished holiday let property owners, or short-term let property owners, or holiday let, whatever you want to categorize them on. There's different terms. There has been a lot of changes, especially coming into force this year. So, we've seen Scotland have a licensing arrangement for the last few years, so which meant it was difficult for mortgage lenders to lend sort of north of the border. England now has obviously brought in a new, basically 100% council tax, doubling up for any second home. So, we're finding that this industry, this area is always changing. So keeping up to speed, speaking to the right people, getting your team on board that know this area is absolutely key.
It really is as well. And you have to be very considerate of the location that you're investing. As you rightly say there, in Edinburgh is going to be different to Wales, is going to be different to parts of England. So yes, so important to do your research and make sure that you're prepared for exactly what your investment is going to entail. Okay then, Ben. So that's number 1. What's tip number 2?
Okay, so you've identified your ownership structure. You've got an idea of how you're going to set up, and you want to still make that step into sort of short-term let of property. I suppose the next step is to identify your property and what's suitable and not. Because if we're going to be considering mortgage lending, we also need to factor those guys in, okay? Because what may be suitable for you may not be suitable for a lender, okay? So the vast majority of holiday let lenders are residential lenders, okay? So I kind of always say, so just factor that in, because ultimately what's suitable for a mortgage lender is based on from a worst case scenario, which is a weird thing to sort of look at. Or they look at it from a very kind of, we're going to repossess the property one day. They have to, and if they were to do that, they want to offload it quickly. And if you're buying a very quirky property, which not got much sort of resaleability, I suppose, then that would probably mean that a mortgage lender wouldn't accept it. So remember that they're a residential lender. Look for residential style properties, I would say. That would give you more lender options out there. There are obviously lenders that will, be a bit more lenient and a bit more open to sort of interesting setups. Ultimately, it's impossible to foresee all permutations until you start getting mortgage applications submitted and getting property valuations undertaken and the legal work is going on and that's been sort of, the title is acceptable. You'll never be 100% certain going into it, but, speaking to your broker, there will be information available to kind of, give you guidance when going with lenders. But some of the common concerns I see with property are too close to commercial. Okay, so what may be a great holiday let property on a high street in a fantastic holiday town, you'd be thinking, yeah, that'd be a great property for me to rent out, make great return. Mortgage lender would look at that possibly and go, that's we've got restaurants next door, we've got bars downstairs. If we did have to take the property back in a repossession, how would we get rid of that? It's not very marketable. So that's one of those things to look out for. How close you are to commercial, especially food and restaurants and bars. That's quite difficult for any mortgage lenders to take on. Covenants, which are title restrictions, really. Again, counterintuitively, if a property is holiday let only, you'd think that'd be perfect for a holiday let purchase. But again, from a mortgage lender's point of view, it means that it can only be sold to one person. So again, these kind of restrictions can put off a lender. So, ultimately, there are only so many lenders in this space. We've not got the likes of all the high street names that we all, banks that we all know. It's very much a growing pool, but a restricted pool of lenders, mainly kind of regional building societies. So, we've got, you don't want to limit yourself down to one or two lenders really, because then you're possibly ending up paying sort of, over the odds, I suppose, with regards to rates.
How common is it for a lender to reject a property as a holiday let? Does it occur quite often?
It can do at valuation stage, yes. I mean, it really does depend on the type of property you're looking at. I would say there is, and like I said, you can't see everything, but I'd say if you're identifying properties at an early stage, try and go for what would be more residential in style. Is the way I'd say it. So, if you've got a property with an annex or an additional sort of outbuilding, again, that could be another possible concern for a lender, because they'll be thinking, well, hang on a minute, you could be renting out the main house to one fucking, then you're going to be renting out the annex to somebody else. Then you've got the cabin or whatever in the garden. Then you've got a campsite as well. And that kind of multi-use bucking kind of is bordering on commercial, isn't it? So, the holiday lenders are, really, really good at providing a solution. Just don't push the boundaries is my advice.
Keep it vanilla.
keep
it vanilla. Keep it normal. All right then, Ben. Tip number 3.
Okay, well, let's look at area number three, which is obviously mortgage lenders and borrowing and products, what's out there and what's available to us. So, first thing to factor in as the buy to as a investment property, you're going to need to put significant deposit into this arrangement. Like a buy to let, 25% minimum deposit is sort of the go-to number. There are lenders that will stretch a little and possibly give you a 20% deposit is allowable. Rates will obviously increase because of that. So, you've got to have your capital ready to invest into this project. But then where do we get the rest of that, finance from? And mortgage affordability is the exciting part here, because this is where we've got so many different lenders who approach lending and affordability in different ways. Okay, so the traditional way to calculate how much you can borrow would be based on the AST model, the tenancy model. So this surveyor goes out, this property would take £1,000 per month. It was rented out to a permanent tenant, but that might be fine if it was a standard property and it was more, in the standard townish area, maybe, or city area. Then that rental figure might stack up and get you what you need for the borrowing perspective. But if we're looking at properties which may be a bit more remote, a bit more rural, and that buy-to-let demand isn't there, then those figures on that valuation will not stack up. So holiday let lenders, some of the holiday lenders have a different model completely, where they use a weekly forecast. And what that is really is taking that valuation away from the surveyor. We're utilizing the experience and expertise of a holiday let managing agent. Okay, so there are plenty of national UK sites out there, the big boys that kind of manage these properties, and they can actually give you an indication of the rental return of that property if they were to manage it. With those figures, myself, mortgage lenders, mortgage brokers, we can work off that, and achieve the borrowing, if the figures stack up to, for what you need.
Yeah, it's not like a residential mortgage necessarily, where it's based on the applicant's salary. It's more looking at what this property is going to earn as a business, really, as a holiday let business.
Yeah, no, absolutely. That's a really good point. Well made, that, James, because it's not really about your earned income at all. We're not going to be looking at pay slips, or lenders not going to be looking at pay slips or tax returns and saying you can afford this mortgage for a holiday. It needs to be standalone. It needs to be self-sufficient. In what would be called top slicing, where you were using your earned income to support affordability if you were short, isn't really an option with holiday let lenders. It sometimes is allowable with buy to let, but holiday let seems to kind of keep itself very squeaky clean. This has got to be on its own. And the way to kind of determine that is utilizing these kind of figures from a managing agent, and and taking them to someone like myself to kind of work out which lender would work for you and how much can you borrow.
Fantastic. So 3 great tips there around ownership and structure, the property, of course, itself, Ben's advice there, keep it vanilla, and the borrowing aspect. So Ben, what are we seeing in terms of the best rates around at the moment? What should people expect as a mortgage rate for a holiday let right now?
Yeah, I mean, looking today at sort of rates, I mean, there's a range. I've identified a couple of products today which ever so slightly just dipped back in with a number 4 at the start, so very high 4s. I've got products that go all the way to sort of 6.5, 7.5%. Now, obviously, what you'll tend to see with holiday let products is you may get a nice low rate, but there'll be a significant product fee to include on that. Or you can take the option with a slightly higher rate and then a smaller product fee. So there's a lot of that in the market. And again, but you'll see some of these higher rates that are out there. Obviously, nobody wants to be paying higher rates, but you'll find that those lenders that are offering these higher rates maybe the ones that are a bit more flexible when it comes to the criteria point of view. So I've got lenders who are offering holiday let mortgages, for people that have got zero employment income. So it may be that, yes, you're not in the job, you may be, just, I don't know, you may be living at home with parents. You're not actually an owner occupier, but you can still, take that step into holiday lets and short-term let property and apply for mortgages successfully, using these lenders, because they're all trying to, fit into spaces where other lenders don't fit.
Interesting. Yeah, interesting there. If you've got the deposit, then you can get going with holiday letting, because it should be a business that more than covers the expenses. So there are opportunities out there. Ben, if people want to get in touch with you, where can they find you?
Yep, House and Holiday Home Mortgages. There's a team of us advisors. I'm actually based down in Chepstow. I'll put my details and links over to you so you can kind of share them. That'd be great. But any inquiries, any questions, anything anyone wants to ask me, then feel free to get in touch.
Sounds good. We'll put your email address in the show notes. Ben, it's been a real pleasure. Thanks for joining us on the House Planet Mortgage podcast.
Fantastic, James. Really appreciate it.
All right, that's a wrap on today's House Planet Mortgage podcast. My thanks to Ben for sharing his top 3 tips. If you need any mortgage support, get in touch with HCH Financial Services. Their team of award-winning brokers provide an unrivaled service, whether you're looking for your first holiday let loan, a remortgage, or a financial product like life insurance or will writing. The team can also help you secure a range of other products, including residential, buy-to-let, expat, and HMO mortgages, along with bridging finance and equity release. To get in touch with the team, call 0333 1234 536 or email advice@hchfs.com. You can also visit the website for further details, hchfs.com. That's it for today. Until next time, happy hosting.